And one thing I just want to just say before I begin is, guys, I'm trying to make my videos more interesting. I recognize and realize at some point that my videos have probably been pretty boring, and so first of all, I just want to both apologize and thank you so much for the subscribers who have put up with my boringness up to this point. So if you've stuck through with it, thank you very, very much. And so here's a picture of me, okay, that my girlfriend made for me, and that really. Hey, what's up, everybody? So today I am going to make a video on my favorite value stocks. Okay, if you don't know what value stock is, it's just basically a stock that is trading at a relatively low price to earnings ratio. So for the amount you pay for a stock, it's not super high. And just if you don't already know, the average P ratio historically has always been around 16. Right now, Tesla is trading at well over 160. And just for comparison, right? That's Tesla. Google is trading about 27. Facebook, if I recall, is trading around 23. And so you can always take a look on Yahoo Finance or finviz.com, the P ratio, and sort of figure out how much you're paying for how much the stock is basically worth in relation to their earnings. Okay, so and one thing I just want to just say before I begin is, guys, I'm trying to make my videos more interesting. I recognize and realize at some point that my videos have probably been pretty boring, and so first of all, I just want to both apologize and thank you so much for the subscribers who have put up with my boringness up to this point. So if you've stuck through with it, thank you very, very much. And so here's a picture of me, okay, that my girlfriend made for me, and that really encapsulates my personal life. Okay, so I like to laugh at things that are probably not funny, and this picture or this meme perfectly describes how I usually live my life. Okay. All right. So without further ado, now that we've gotten that out of the way, so today I'm going to be talking about a couple of stocks that are just really great stocks to trade and to buy, to hold, and to have, just because the price to earnings ratio really is pretty low. So you're getting a pretty good price. And especially in 2022, where I think we're going to see a lot of market volatility because of the federal tapering and a lot of the things that the Fed is going to inevitably have to do. Right now, I think stocks with low P ratios are probably a safer way to go. And if you want to do options, sure. I tend to I'm trying to actually stay a little further away from leap options. Although in 2021 I thought leap options were great. In 2022, we really don't know how the market is going to move, and because I'm a little more conservative, because I really want to invest safe, I'm going to also show you some strategies I would invest with these stocks. Okay, so first stock ticker is ZIM. Okay, so ZIM stock, as you can see, is trading around $63.70. Look at the PE ratio, guys. It is 2.29. That is insanely low, okay? It has a market cap of $7.55 billion. Dividend yield of 15.7%, guys. If you want to make, just in dividends, about 15.7%, Zim Integrated Shipping Services is a company that you want to own. Okay, it is a company in the cargo shipping industry. Take a look for yourself. We're not going to go through, too much of the fundamentals, but just really introducing you to stocks that I own, and that I really enjoy myself. Now, before I continue, I do want to mention that this is not any kind of financial advice, but this is simply stocks that I would want to point you towards. Take a look for yourself. Okay, so along with Zim, I can't go without introducing Ken stock as well. So Keenon Holdings. So there's a Kenon Holdings. Keenan, I don't know. Sorry if I totally botched it. Okay, so these are just really actually a spinoff from Zim. Okay, so if you own Kenon, you're really owning Zim as well. Zim is simply a subsidiary. But look at this. So Ken is trading at a P ratio of 4.35. Again, guys, that is insanely low, right? If you look at some of the other stocks like Facebook, Google, Tesla, the P ratios are much, much higher. And so you're going to get a great deal right now if you're trading Ken. And again, this is another company that is, in the entire shipping industry. They're headquartered in Singapore, but it is a company that is a spinoff from Zim, okay, which is located in Israel. So they do pay a dividend yield of 7.2%. So that is a pretty decent yield for the dividend rate. And so take a look for yourself. Now, on these two stocks, the way I would trade it is I would simply just buy out shares. Okay, so I think right now is an okay time to get in. I do think it's gone up in the last year, but I do think this is still a pretty good time. If you want to go options, right? I really wouldn't do leap options or even call options, because then you're sort of giving up the dividend rate that you would be paid. So if I were to sell options, I would probably just sell puts. And that way, if you take a look at this, if you go out, all the way a year out, even you can get paid a premium of $1,710, and with a max collateral of $4,290. I talked about this in a more in-depth video where you can actually have a lot of that collateral. You can borrow a lot of that money that you need for collateral using interactive brokers, but I'm not going to talk about that in this video today. But this really is a pretty decent trade, because if the stock goes down, yes, you're going to get assigned, but at the same time, you got paid a pretty significant premium. Now, if you want to sell puts with a shorter expiration date, then of course you can. Even right now, if you do, let's say March, you can get paid a premium of $700. If it goes down to 63, you'll get assigned, but if it continues to go up, then you're going to make money. Okay, I know I'm starting to sound a little boring, so I'm going to hurry up and move on. Hey guys, if this video provides any kind of value to you, I would greatly appreciate if you could hit that like button, just so that I can share this with more people. And make sure to subscribe if you haven't already. Thank you so much, and now back to our video. Okay, so next stock ticker is MOS. Okay, so Mosaic Company. Okay, it is a Fortune 500 company based in Tampa, Florida. Okay, so it mines phosphate and potash, or potash. Potash. All right, sorry guys, that was a little immature of me, and I just want to apologize. But Mosaic is trading at a really relatively low P ratio of 9.29. It does pay a dividend of 1.04%. It has a market cap of $16.38 billion. And if you take a look at the year-to-date chart, okay, it's gone down and up and down and up. So it is somewhat volatile, but I do think this is definitely a buy for long term. And so what I would do with Mosaic is I would definitely consider selling put options on it first. Okay, so I always love selling puts, because you're getting paid essentially premium to own a stock at a cheaper price. Okay, so taking a look at the options where you can sell premium for, you can go out to February 18th, and yeah, right now if you're willing to buy the stock at $42, you can get paid a premium of $165. Okay, that's expiring February 18th. Let's just take a look at how much premium you can collect if you sell a leap put. Okay, so that's pretty decent premium. Okay, so if you're willing to buy, Mosaic at $42, you can get paid a premium of $645. So that's pretty good. And if it goes down all the way down to 17%, that's when you'll really start to lose money. And so that's a pretty good bet. Okay, so that is Mosaic. All right, guys, who in here is gonna invest in Mosaic? All right. Okay, next stock ticker. Okay, these two are similar in a very similar industry. Is MT stock, and that is, oh my goodness, these are hard to say. Okay, maybe I'm just not great with English, but is it Arcelor Middle? Sorry if I totally botched it. Okay, ArcelorMittal. Okay, something Mittal. Okay, it is a multinational steel manufacturing company located in Luxembourg City. Okay, so this company is in the steel industry. Look at the PE ratio, guys. 3.53. That is insanely low for a market cap of $36.98 billion. Dividend yield is 0.81%, which is almost nothing. But still, you guys are going to get in on a pretty good deal because steel is getting hammered. But we have seen sort of recovery in the last couple months, so that's great. The way I would trade steel or MT specifically would really just be to the same thing, sell leap options, sell put options. Okay, so this is not supported on Robinhood, so we're gonna move on to the other stock that is very similar to MT, and that is TX. Ternium. Okay, I am sorry if I botched every single one of these company names. I just can't pronounce it. But it is the steel company located in Argentina, Brazil. Okay, so, actually Argentina, Brazil, Mexico, Guatemala, Colombia, and the United States. Okay, so all over Latin America. Right now, guys, it is trading at a low P ratio of 2.67. Okay, market cap of $9.14 billion. With a dividend yield of 6.23%. I would simply just buy the stock. In fact, I've been buying really since the end of last year, and it's actually gone up a little bit, but I do think there's plenty of room for the upside. Okay, next stock ticker is BTEGF. Okay, that is a long stock ticker, but it is the Baytex Energy. That is maybe one of the companies that I did not botch. Hopefully not. That is based in Calgary, Alberta, Canada. Okay, so crude oil. And I'm going to tell you another stock that is actually in a similar industry. We're just going to group all these together so that you won't be too confused. So Baytex Energy Corp is trading at a really low PE ratio. Doesn't say here, but I think it's like less than 2. And right now it's trading at $3.6. So this is considered a penny stock. If you take a look at the year-to-date chart, it is up, guys, 421%. All right, so if you had bought just last year, you would have been stupid rich. Okay, but I do think this is still a great time to buy in. And on that note, I don't think they actually do options for BTEGF, but for this stock, guys, this is one of my favorite stocks of the year, and it is Crescent Energy Corp. Okay, same thing. It's also another company in oil gas based in Calgary, Alberta. Guys, I don't know why Calgary, Alberta is so huge on gas. Maybe they have eaten too many beans. All right, sorry, that was a bad joke. That was a really, really bad joke. Sorry, guys. I hope you don't unsubscribe because of that joke. Anyways, so taking a look at the year-to-date chart, guys, man, if you had bought, I'm not trying to brag or anything, really, I'm not trying to boast, but I started recommending this stock back in October, and if you take a look at this, right, if you had listened, if you had watched more of my videos, if you had subscribed, guys, you would have bought into this and gotten stupid rich, right? It went from about $5 to about $6.63. All right, so it has gone up quite a bit actually in the last month, 50%. All right, so that's not that bad, right? 50% return. It still, it doesn't say here, but it's still trading at a pretty low P ratio. And take a look at yourself through fundamentals. The way I would trade CPG is I would buy actually leap options or call options. Okay, more specifically, I would actually buy leap options or buy shares. Okay, so leap option, guys, if you don't know, I covered this definitely in a lot of my videos, is where you simply just buy a call option at least a year more out. Guys, look at this, man. I have one call option right here. I actually have other call options in my Interactive Brokers account, but it is up 91%. Guys, you gotta subscribe, all right? I know I'm not perfect, but a lot of these calls, man, I really think you would have done pretty well. Okay, so the next stock ticker, okay, there's just a couple more, and I know perhaps you're probably losing your patience with my stupid jokes, but stock ticker is HPQ. Talked about this in some of my other videos. HPQ, if you have not heard of it, then you were not old enough to be trading stocks, but it is simply Hewlett Packard. Okay, so Hewlett Packard, if you have a printer at home, you would probably know of HP. The stock actually is trading pretty well as well. I started buying this in October, I think earlier than that, and so ever since then it's gone from $27 to $38, guys. So the last couple months has been going up, up, up. Because why? Because P ratio is at 7.21%. Guys, these are stocks that just are trading at a discount. All right, like for the amount of money to earn versus the price of the stock, it's just cheap, and that's one of the strategies that's gonna really do well for you if you buy stocks that are undervalued, as Warren Buffett said, and stocks that just have a lot of potential. That's really as simple as that, right? You want to find solid companies, undervalued, trading at a discount, go all in, or no, sorry, not go all in, but have a basket, and just invest with confidence. Okay, so I think that's it for today, guys. I really appreciate your time. If I earned your like, make sure you smash that like button for me. If you have any questions, feel free to leave it in the comments below. Let me know, guys, if there's any of these value stocks you would trade. Just simply yes or no. I would love to hear from you. I would love to interact with you. Until next time, guys, I will see you around in the next video.